It's all about making sure we use AI right. Because as fiduciary, we are fiduciaries for our clients. We got to make sure that we're doing things in the best interest of the client. Welcome to the Live Greater View, a financial planning podcast produced by VLP Financial Advisors that discusses life, money, and perspective. We help clients live their best life at every stage through our VLP Live Greater partnership process. Thank you for tuning in. All right, welcome back. My name is Rose Price, a certified financial planner and partner here at VLP Financial Advisors.
And I'm Chris Mullen, partner and financial planner here at VLP.
So good topic today, Chris. We got how is AI changing the wealth management industry? And AI has been really brought to the forefront in the last couple of years with a lot of the development, but this is something that's really been in our business for a long time.
Yeah, and I think what's unique about our conversation today is we're going to start with a couple of different aspects. We'll talk about, the obvious, like what are thoughts on investing in this space? What does that look like? And then we'll move into, well, how's it actually changing our industry, how we provide advice? Have we seen some of this stuff before? And we'll just kind of set expectations for where we think it's going to go in the future.
Yeah, I think that'll be an interesting conversation because a lot we hear today, the news, the headlines is, how is AI going to replace jobs and people? So I think it'll be a fun topic to kind of dive into.
Yeah, for sure. So let's talk about just the investment implications of AI. This is obviously a big topic getting a lot of headlines. I thought it would make sense for us to just share our off-the-cuff thoughts for things that we're looking at in this space.
Yeah, the underlying companies, that's easy, right? We know the big names, the players, the chips, the infrastructure, the providers. But really what it's allowing is ability to do a lot of the jobs quicker and faster, right? So you're seeing AI taking over. There are some jobs that are going to go away because of AI, because they're going to automate, they're going to be able to do quicker and faster processing. But it all comes down to they're not all created equal, right? So that's something we dive into a lot from our perspective.
Yeah, and just in a format like this, we can't talk about individual stocks or individual names. Just wanted to put that out there. But you're absolutely right. So we're talking about the semiconductors, and then obviously the hyperscalers. These are these big companies that are going to implement it across their entire business. And I also think it's worth talking about the different size companies and where that's at so far. From our perspective, the largest beneficiaries for companies that we invest in are these large, really enterprise technology companies. And the reason why that's so important is because a lot of times within technology, the thought process is, if I could get in early on a smaller company that's going to really benefit from tech, then it will just run to the moon. And we really haven't seen that so far. A lot of those companies aren't publicly listed yet. That's something that we're obviously keeping tabs on, but it hasn't played out that way so far.
Yeah, that's 100% accurate. And, part of it is because, especially in the semiconductor space, these were names that are out there that maybe everybody didn't know until about a year or two ago.
Yep.
But certainly companies that were of large scale that were already doing this kind of work, it's just now that with the development in the AI and how fast the progression is, and really to your point, the large technology companies really diving in and saying, hey, we're going to make this a focus. We're going to use this, as all the ChatGPTs and those types of things come to play, there's more and more need for those semiconductors, and that's really escalated some of that awareness.
Yeah, so they've benefited because they have all of the money and the infrastructure. And then I also think it's important that if we think about from a business model standpoint, those larger companies, they have the roles where they tend to be repetitive and things that are just ripe for AI to take chairs and essentially
streamline it,
right, and make their profit margins bigger. So I think if you say, hey, winners or losers, large or small, when it comes to AI, large companies are definitely running away with it as of now.
Well, they have the money, right? This is not an endeavor where you can just go out with a startup and quickly get into the space. This is developing and moving so quickly that the more assets and ability and cash that you're going to be able to put behind this, they're clearly going to have the ability to get a little bit faster and quicker.
Yeah, great. So we talked about the investment aspect, the size companies. Something that also plays more into this investment lens of AI is how it's actually used within portfolio management software. This is something that we've seen continue to play out really over the last 12 months of, using AI to make decisions of actual underlying holdings within a portfolio. So let's unpack some of that.
Yeah, so this is actually not something new, really. Robo-advisors would really fall into that camp, and they've been around for a long time. What I would say is that, that used to be the thing, 10, 15 years ago. Robo-advisors going to replace advisors, but that really hasn't happened. Matter of fact, most big companies are now, they're getting rid of the robo-advisor, or it's becoming less important. And really, I think that comes down to, it takes, the robo-advisor and the AI takes out the personal aspect of investment in financial planning. And, one of the biggest things when it's fine, 100% fine when the market's going up, right? When the market's going straight up, everybody's happy. But when you hit that periods of volatility, or you have a period where there's a prolonged recession, then there's something to be said about having that personal relationship, someone to call to kind of talk you off that ledge, or to not make that mistake to say, take me out of cash. So I think the robo-advisor, that technology has been around for a long time. And, what I would say is that it hasn't replaced advisors. As a matter of fact, it's actually made, it's come full circle where we've seen that advisors are now, seen as, yes, I need to keep that advisor because robo isn't exactly what I thought it was going to be.
Right. It didn't play out.
Right.
Gather some assets, and then, then it really kind of, fell apart. So we'll see obviously where that goes. Awesome. Well, that covers the investment aspect. Let's shift gears more into technology from a bigger picture perspective, how it's impacted our industry as a whole historically, and then how we think AI is going to follow, some of those trends.
Yeah, I mean, really in the 2000s, I think Chris was maybe, how old were you? 5, 10?
Something like that.
Something like that.
Yeah.
So back in my day, one of the big things was portfolio management, allocation software. When before we had automated software, we used an Excel spreadsheet and figure out what percentage we're going to put here and here. And, really this helped kind of streamline and allowed us to be able to do things quicker and faster. You were able to trade quicker, you were able to upload spreadsheets. So one of the biggest things, which really came about in the early 2000s, was this automated portfolio allocation. Mm-hmm. So if someone's going to be what we consider, an aggressive growth or growth portfolio, and you have parameters, you can now do this, and the software, did the rebalancing, figured out the trades for you, helped you kind of guide the scenario. So that was really back in the early 2000s when Chris was 5. And then, something that's changed over also is the financial planning software.
Yeah.
That we'll go back to like when Bruce started the company. It was like done by hand in these big binders. Now like we have software programs like Money Guide Pro and eMoney and there's all kinds of Right Capital, different companies out there. And that's really where, you're sitting down across from the client. Hey, where do you want to go? What are your goals? And what's the likelihood you can meet them?
Right. And I think the takeaway there is that exercise historically be like, hey, here's where we are today. Where do you want to go? And then that advisor would put pen to paper, take a return assumption, take, inflation adjustment, and all that stuff would play out. Then all of a sudden you have this, financial planning software that back in the day was this big booklet.
Binder. Yeah.
And then fast forward, 10 years now, it's live. Now we can update it on the go. So I think, that pattern of, hey, it starts with this and it gets shorter and shorter and shorter and faster, we're going to see that continue. The last piece here, robo-advisors, you already really covered that. That's just something, again, it just hasn't played out. It seems like that, sort of narrative, hey, it's going to take over the world is really, lost its luster. Yeah.
And I think that not just in our space, but there's a lot of expectations where AI is going to streamline and make things more efficient or replace jobs. And, my argument would be don't count your chickens before they hatch, because from our experience is that, there's going to be components where AI is really going to move the needle like it did for our financial planning software, for our portfolio management. And we'll talk a little bit later, again, another software that we just added recently. But, there is an aspect where you still have to someone has to data check, someone has to fact check, someone has to make sure that the assumptions that, was put in, because one of the big things we all know is, everything's out on the internet, and, where AI is working from, you got to be careful what that pool of information is.
Sure. And I think, the behavioral aspect we've seen, even over the last several years, just how wonky markets can get.
Yep.
And, there's been a big pickup in volatility for a number of different reasons, but the daily movements have been more so recently than what they have been historically. I mean, I remember the morning, the pandemic, walking in and seeing oil that's negative. And you and I looking at each other, what,
I'm like, how did you get here? Did you drive your car?
Yeah. Where do we go from here? I mean, if you were to plug some of that stuff in, or even the volatility index spiked to, 60 recently in the spring.
Yep.
Those sort of tail risk variables that are very likely to happen over the longer term, AI is not built to built to comprehend a lot of that.
Right. And even if it does start to figure out, they always say, oh, it's always the same pattern and this time's different, or this, there isn't. I mean, if we look back through the countless scenarios of whether it was a savings and loan crisis, it was the 2008 Great Recession, and so on and so on, they weren't all the same. So, and the part of I always tell clients, hardest part whenever you're in a scenario like that is when you're at the bottom, it's hard to see the mountain.
Yeah.
Or when you're at the mountain, it's hard to see the valley. And, AI is not going to be able to be able to have that conversation or say, oh, it'll give you some, hey, this is what happened in this period, but that may not apply.
Right.
So it'll be interesting.
Right.
Yeah.
Great. Well, I think there's a clear pattern there. Hey, this is the next phase of technology. We've seen, these iterations before. Obviously, AI is its own animal, but we'd expect, those things to fall into place very much how things have historically. So let's go ahead and fast forward to where we are today. So we've seen a lot of different companies, come out with different tech stacks, and
Yep.
we've first, really started to have our iterations of AI actually directly in our industry. Let's unpack some of those companies and uses.
Recently, so one of the big ones. So the problem with AI in our business is our regulations, right? We have personal information. We can't just have our clients' data out on the internet and have a free access open like ChatGPT is, right? ChatGPT, you put stuff in and it goes and searches the internet. And well, one thing we know is the internet's not always accurate, right? So from our perspective, there's limitations on what we can have available because of the information that we utilize.
Right.
So one of the newest software, we have added, which is a note taker. And this was a endeavor, right, to unpack, because you have to make sure that, first of all, where is this? Is this a closed system? You're going to talking to clients. We have conversations with clients about personal stuff that they might not even talk to their family about.
Right.
And their money. So that's something that we have to be very cognizant of. So we have to make sure it's a closed system. It's not out there on the internet. It's not accessible. Where is this information housed? That was important. Ours is, we were using a note taker called Jump AI. That is in the U.S., a closed system. And the other thing was recording. For us, our recording has to be deleted in 7 days. So, it's all about making sure we use AI right. Because as fiduciary, we are fiduciaries for our clients. We got to make sure that we're doing things in the best interest of the client. So when we look at what we're going to add and how that's going to take place and how it's going to benefit the client and our ability to be able to service the client, we really have to think through, what are our tail risks, right? So the AI, which the Jump AI has been a huge one. It's really helped us. Here at the company, it's allowed us to be a lot more efficient, where typically we've had multiple people in a meeting where we can have, if someone's not available, it can just be the advisor and the client. So I think, how about some of your experiences with Jump AI?
Yeah, it's been a big time saver. I think there's a time and a place where you say, hey, this makes sense for this software to fit in. I've also had instances where I say, this client might not be comfortable with this software. Right. It's just not their style. And then I don't use it. But, I think the theme of, hey, making sure that it's secure, making sure that you ask for permission to use stuff like that is very, very important. And, we're fiduciaries first. So we're always going to err on the side of being conservative when it comes to these sort of things. So I think eventually it will be a time saver, but there's definitely, pieces that need to be ironed out over time.
Yeah. And I see there'll be iterations and more advancements in some of our other technology, whether it's our tax planning technology, our financial planning, as AI continues to build momentum and they can figure out how it's going to work and how it's going to fit in. I can definitely see that there's going to be, again, another continued evolution of how this is going to impact our business.
Yeah, and from a time perspective, I'd also say it's really moved the needle for writing. We do a lot of blog posts and emails and things like that, and of course, the data needs to be hard and fast and obviously correct and updated for the latest numbers. But then there's that sort of time-consuming aspect of actual writing, and we've used it just for edits and really, I would say, a start, just much like the rest of the world has. Hey, it's a good starting point. And then go from there on some of the
because if you were doing a blog post on tariffs, that changes by the hour. So
yeah, there you go.
you need to be quick on that one.
Yeah, stuff like that. So that'll be a big time saver. So more to come there. For where we go from here, I know we alluded to the robo-advisor specific piece. I think it would be good for us just to wrap up with, hey, as AI continues to iterate, is it going to replace financial advisors, or just our general, off the cuff thoughts on that?
Yeah, I think the first thing is you can't call AI, right? You can't call up and say, hey, AI, today the market went down 2%. I'm thinking about going into cash. And AI may say, oh, well, here's 5 reasons. Here's the pros and cons. Yep. That's probably the response you're going to get. It's not going to be the, hey, have your goals changed? The conversation that we have with clients when that call comes in, inevitably, every once in a while you're going to have a client just because their situations change. They're close to retirement. They're in retirement. There's a reason why they're more concerned. So, I think the big thing is that's where I tell, clients and our team, that's where we do our best work, right? That's where we have the ability to say, hey, have your goals changed? What's going on? Remember, we did that financial plan. We planned for this market volatility. Here's why we have these things in place. AI is not going to be able to do that, right? So I think if nothing else, that's still advisors need to be relevant, because you can't ask, you can ask AI all kinds of questions, but you're not necessarily going to get back the right response or personalized.
Right. And what really resonates with me is, AI is obviously based off of history. And like you said, it will rattle off all these different instances. Within our emotional wiring, when it comes to markets, where you see, hey, the market's going down, you see, a lot of red on the screen, you're always going to have that emotional blind spot to say, hey, you know what? It is different this time. We haven't, had something like a pandemic. We haven't seen some of these drastic changes with an administration. We haven't seen something like this happen with a specific company. And slowly but surely, that blind spot will get bigger and bigger. You'll justify that to yourself to say it is different this time. So just knowing that and having someone to talk to and unpack that is just so valuable. And then secondly, the confidential part. I know that we alluded to that. That's just so important. You don't want to be putting your personal information into a chat bot and just, saying, hey, tell me what you think when it's out on the open web. That's such
my name is X, blah, 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 and I have this much money and yada, yada. Can I retire in 5 years?
Yeah.
Right. And I think that's true. And I think, the other thing is, AI still goes out and searches, right? And depending on which engine you're using, which chat, you get some bad data. I mean, not everything on the internet is accurate. There's a lot of stuff put out there. There's a lot of things that misleading or aren't clear. So I think, again, having that ability to have a group of people, a team, to call to say, hey, here's my scenario, this changed, because inevitably things change in life. When we are meeting and sitting across from clients to say, look, this plan is good now. Inevitably you're going to call, something's going to change. You're going to find a house here. You're going to do this. You're going to want to travel more. Whatever that picture looks like, that is why we do the planning. You have that ability to call and go, okay, no problem. Let's run that reiteration. Let's see what that looks like. And it just gets harder and harder, because there's so many fundamentals that go into when we're doing a plan and all the questions we ask that, I don't know, it would take a long time for AI to learn that and be able to replicate.
For sure. Not to mention all the emotional aspects of it and whatnot. So great. Well, we went from the investment aspect to some of the history of tech in our space to where we think it's going. So I think we've hit on all of it. As always, as we thank our listeners, our subscribers are up over 50% over the last handful of weeks. We're getting a lot of traction here. This topic, as well as many of our other topics, are actually from our client meetings, or clients that say, "Hey, what do you think about this space? It'd be good for you to talk about this on air." So, as always, we encourage you to pass this along to family and friends. Reach out to us if you have any other topics that you'd like for us to discuss.
Yep, and thank you for joining us today.
Thank you.
Thank you for listening to this episode of the Live Greater View. If you like what you heard, please subscribe to our podcast on iTunes or Spotify and recommend our podcast to family and friends. To learn more about VLP Financial Advisors, please check out our website at vlpfa.com. Thanks again.
And now for our necessary disclosures. Securities and advisor services offered through Cetera Advisor Networks, LLC, member FINRA SIPC, a broker-dealer and registered investment advisor. All investing involves risk, including the possible loss of principal. There is no assurance that any investment strategy will be successful. The views stated in this podcast are not necessarily the opinion of Cetera Advisor Networks, LLC, and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned. Due to the volatility with the markets mentioned, opinions are subject to change without notice. Information is based on sources believed to be reliable. However, their accuracy or completeness cannot be guaranteed. Past performance does not guarantee future results.